The JSE is little changed in midday trade, while its global peers were mixed as global markets await a new catalyst to provide direction. The JSE all-share reached a fresh record on Tuesday, closing above 72,000 points. For more on these developments, we are joined now by Matete Thulare, Head of Foreign Exchange Execution at Rand Merchant Bank. Matete, good afternoon. This is where we'll start. Yesterday, the JSE broke through the 72,000 level for the first time ever. Are we going to reach 73,000 points today?
Good afternoon, Hugo, and happy Wednesday. I suppose global equity markets are through the roof. I mean, over the last 2 weeks, equities have been under pressure from a hawkish Fed and obviously concerns around the Omicron virus. But also, I mean, when we just look at it, the Chinese technology sector has also been under pressure on tighter regulation risks, and obviously their property market has also been a source of risk, with some of the big property developers also missing some scheduled bond payments. And all those risks have created pressure and de-risking. And over the last few days, the fears around the virus worst-case scenarios have abated. Chinese economic data has also been solid. That's also easing fears of an accelerated slowdown. We've also seen China effectively cutting rates, which has added further stimulus into commodities and risk assets. So from a 2-week period of de-risking and fears, suddenly this week we've seen all that positive news really reassuring the markets and investors, and we've seen the sharp rally that you speak about, and effectively we've made in 2 days back all the losses that we've seen in the past couple of weeks. So it is quite an interesting day that we are seeing, but obviously the JSE at this point in time a bit of retracement, but I suppose as we're saying, all the positive news that is coming out slowly and for surely, I think we will see that 73,000 not too far from now.
Well, Stats SA is due to release retail sales for October. Some analysts have flagged that retail sales growth in South Africa seem to be presenting a confusing picture at the moment from Stats SA and a host of JSE-listed retailers. What are your thoughts?
Sure. I suppose when you just look at some of the polling that has been done, I mean, already we've seen that the forecast for October will show a growth of around 1.8% year on year. That's slightly lower than September's 2.1% reading. Now, the retail sector has had a mixed year, as it was one of the major casualties from the July riots that we saw. That's contributed to an economic contraction in the third quarter of this year. But retail sales are still below the level that they were before the riots, and also more importantly, they're still below the level of March 2020. Now, that's before the COVID pandemic struck. But nonetheless, I suppose this relatively lackluster statistical situation that we are seeing is reflected in some of the trading updates from the likes of Shoprite. I mean, obviously they've managed to exhibit really strong sustained growth in revenue and earnings per share. And even the likes of TFG and Mr. Price in the clothing, footwear, textiles and leather goods segments, they've also done well. But I suppose when you just also look at the November retail sales figures, which will contain the Black Friday shopping weekend that started on November the 26th, that will only be available in mid-January. Now, a lot of retailers have been really tight-lipped about the outcome, but it looks like even though with the pent-up demand being in evidence, the background economy is so weak that, the strong Black Friday performance really seems unlikely, and I think that could also be shown in the numbers that we get this afternoon.
Matete, let's turn our attention to commodities, and gold seems to be tracking gains while oil looks steady after an indication of a big increase in US stocks. Talk us through the latest commodity moves.
So I suppose, Hugo, the big talking point for us has been iron ore at this point in time. I mean, that's surged above $110 a ton. I mean, that's reaching the highest level in more than 5 weeks. That's based on expectations that China plans to ease their property curves. That's also boosting demand for the steel-making material as gains accelerated. Also, after customs data showed that Chinese iron ore imports have rose to the highest in over a year. Now, consumption is expected to rebound in December, as steel output recovers, and also the mill's profit margins also increase. I suppose what's also further boost is the fact that China's top leaders have also pledged to stabilize the economy and provide more affordable housing next year. So now that improved sentiment in the property market has fueled a surge in the iron ore prices. And even so, the market rebound is mainly driven by expectations of increased steel output in December and in the first quarter of next year. I mean, if you just look at iron ore, it has been on a roller coaster ride this year, losing more than half of its value since May, amid a slew of outputs and also pollution curbs. Whilst the turmoil in the real estate sector, spooked by China's Evergrande debt crisis, has also dampened the construction activity that we saw out in China, and that's also had an impact on the price of iron ore.
Well, Nestle SA is selling parts of its stake in L'Oreal South Africa back to the cosmetics maker for 8.9 billion euros. How significant is this move? Does anything change for shareholders?
This is quite a substantial transaction. I mean, 8.9 billion euros is nothing to sneeze at. I mean, so already Nestle has announced yesterday that they are cutting its stake in L'Oreal to about 20% by selling those shares worth around 9 billion euros back to the French cosmetics brand. Already we know Nestle, I mean, that's the makers of Nescafe. They hold, quite a substantial amount in L'Oreal, and I mean, this has been a subject of intense scrutiny over the past couple of years, and the Swiss company has maintained its interest in L'Oreal as both financial and strategic, but it looks like Nestle already approached L'Oreal 2 months ago, which kicked off a flurry of negotiations that involved chairmen of both companies, and following this deal, Nestle said it now would own 20% of L'Oreal, down from about 23% previously. And obviously, it just shows you that, it is quite a substantial transaction for 9 billion euros.
Head of a Forex execution at Rand Merchant Bank, Matete Thulare, thank you for your time this afternoon. And he was taking us through the markets as at now.